Banking. Banking is an industry that handles cash, credit, and other financial transactions for individuals, consumers, and businesses alike. Banking provides the liquidity needed for families and businesses to invest in the future and is one of the key drivers of the economy. Examples of banking. Banking consists of many activities that can be done through a number of financial institutions that accept deposits from individuals and other entities, and then use this money to offer loans and to invest and earn profits. Banks can be placed into certain categories based on the type of business they conduct. Commercial banks provide services to private individuals and businesses. Retail banking provides credit, deposits, and money management to individuals and families. Community banking. Community banks are smaller than commercial banks. They concentrate on local market. They provide more personalized service and build relationship with their customers. Internet banking provides these services via the World Wide Web, the sector in which called e-banking, online banking, and net banking. Most other banks now offer online services. There are many online-only banks. Since they have no branches, they can pass cost saving on to the customers. In addition, much like online banking, many banking services can now be done completely through your phone digital device. Banking and investing apps continue to grow in popularity and may mean you never have to visit a brick and mortar bank at all. Savings and loan banking. Saving and loan are specialized banking entity created to promote affordable home ownership. Often these banks will offer a higher interest rate to depositor as they raise money to the lender for mortgages. Credit unions. Credit unions are financial institutions that operate similarly to standard banks in many ways, but with different structure. Customers owe their credit unions. This ownership structure allows them to provide low cost and more personalized services. You must be a member of their field of membership to join. That could be employees of the company or schools or residents of a geographical area. Investment banking. Investment banking finds funding for corporations through initiate public stock offering or bonds. They also facilitate mergers and acquisitions. The largest investment bank include like Bank of America, Citigroup, Goldman Sachs, among others. Merchant banking. Merchant banking provides similar services for smaller business. They provide mezzanine financing, bridge financing, and corporate credit products. Sharia banking. Sharia banking conforms to the Islamic prohibition against interest rates. Also, Islamic banks don't lend to alcohol and gambling businesses. Borrowers profit share with the lender instead of paying interest. Because of this, Islamic banks avoid the risk assets classes responsible for the 2008 financial crisis. How it works, how banking works. Banks are a safe place to deposit excess cash and to manage money through products like saving accounts, certificates of deposit, and checking accounts. The Federal Deposit Insurance Corporation insures them. Banks also pay savers a small percentage of the deposit amount because of interest rate. Banks savers a small percent of the deposit amount because of the interest rate. Banks are currently not required to keep any percentage of each deposit on hand. Through the Reserve can change it. Through the Federal Reserve can change it. That regulation is called the reserve requirement. They make money by changing higher interest rate on the loans than they pay to the deposits. The central banking would not be able to supply liquidity without central banks. In the United States, that's the Federal Reserve, but most countries have a version of central bank as well. In the US, the Fed manages the money supply. Banks are allowed to lend. The Feds have four primary tools. One, open market operation occur when the Fed buys or sells securities from its member banks. When it buys securities, it adds to the money supply. The reserve requirement lets a bank lend up to their entire amount of its deposits. The Fed funds rate sets a target for banks' prime interest rate. That's the rate banks charge their best customers. The discount window is a way for banks to borrow funds to support liquidity and stability. In recent years, banking have become very complicated. Banks have ventured into sophisticated investment and insurance products. Notable happenings: banking underwent a period of deregulation when Congress repealed the Glass-Steagall Act, that law that prevents commercial banks from using ultra-safe deposits for risk investments. After its appeal, the lines between investment banks and commercial banks blurred. Some commercial banks began investing in derivatives such as mortgage-backed securities when they felt depositors panicked. Some key points: banking offers savings, loans, and investment products and services to individuals and businesses. There are many types of banks or financial institutions with specialized functions and populations they serve. Banking is regulated at the national level by a central bank. For example, Federal Reserve in the US that works to maintain liquidity and economic stability. If left unregulated, banks compete in an open market which has historically proven to be risky and lead to numerous financial crises. Thank you very much. Let's keep raving more about finances. Bye.